Hey, good morning, everyone. It's Matt Donaghue with Mission Financial Planners, and this is our weekly market update. We're going to talk about what's happening in the markets, share some practical tax strategies that you can use now, and help you avoid some long-term financial mistakes. So let's jump into it. Federal Reserve last week they decided to hold steady. They're going to keep the Fed rate at 4.25 to 4.5%. The market is really in a wait and see mode as far as that concerned. But when we think about what's coming up next, there's some key data coming out this week. We've got the consumer price index. In addition to that, we have the producer price index coming out, which is going to measure some business cost pressures basically, and then retail sales. That'll give us a little insight into consumer behavior and some economic momentum. Earnings, the Magnificent Seven are back to being magnificent. When you look at Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, and Nvidia, they combined for an 11.3% earnings surprise, which is the best quarter they've had since Q3 of 23. That caused analysts to revise earnings by up to 1.8%. And however, the rest of the S&P 500, so maybe the S&P 493 was revised down by 0.8%. So there's a bit of a mixed bag with earnings, right? The big guys keep going, but the everybody else is struggling a little bit. What's beneath the surface? Well, 48% of the Mag 7's revenue comes from outside the US, and 45% of their supply chains are international. So they do have a high exposure to tariffs. And we've had some good news coming out of Switzerland this weekend, but we'll see how that plays out in the long run. Tech giants are expanding aggressively into AI, cloud, and advertising. So we'll see how that pays off in terms of revenue. Some of the early wins, though, double-digit cloud revenue growth, AI enhancements are providing ad conversions or helping to improve ad conversions, and billions of people are using AI tools at this point. So AI has really grabbed a foothold and is taking off. Some risks that investors need to watch. There's some global supply chain instability. Again, tariffs are going to impact hardware, semiconductors, and autos. That in turn can lead to consumer demand slowdowns. And then, of course, there are some antitrust and regulatory threats to the Mag 7 specifically, such as search engines, app stores, and maybe some monopolistic practices. Some takeaways. Diversify your portfolio. Don't let success in one sector create overconfidence or concentration risk, and review your allocation to ensure you're not overexposed. Okay, some tax smart planning you can do right now. First is understand above the line deductions. This reduces your adjusted gross income and it unlocks tax benefits even if you don't itemize. IRA contributions. Hey, those are tax deductible, so are contributions to self-employed retirement plans, HSAs. Student loan interest up to $2,500 is deductible if you meet certain income thresholds. Health insurance premiums are deductible for self-employed individuals. Educator expenses up to $300 for classroom supplies. Hey, if you're active duty military and you are moving, your duty station changed, your moving expenses are deductible. And early withdrawal penalties. If you take money out of a CD, life insurance policy, or an annuity early and you pay a penalty, those penalties are deductible to you. Half of self-employment taxes. Well, again, those are people who pay both sides. You're self-employed, you're paying the full FICA tax, not just for yourself, but as the employer as well. So review these deductions every year, right? You want to make sure that you're coming in and talking with us. We can actually do this review for you here at Mission Financial Planner. So make sure you come in and get that review done. It's the perfect time of year to do it because you have a lot of time to make sure this year's tight. Some hidden tax traps in the last minute here. This happens when you get to retirement. So the big one is RMDs. The challenge with contributing to things like traditional IRAs, which can be great for a short-term tax deduction, is that you will pay the bill on it later in life when you have to start taking the money out. So RMDs are going to start in your 70s, and you're going to want to plan for those. Tax Cut and Jobs Act, we'll see if that gets extended. It looks like it's going to. The other thing, though, that you want to watch out for is the surviving spouse penalty or the widow's penalty. You're married, your spouse dies. Well, the next year, you're going to have to file single, and in many cases, your income didn't drop significantly to align with that. So you've got some issues there, right, when your spouse dies from a tax standpoint. And then we're going to see what's going to happen with the estate tax as well. So some key takeaways for you: market shift, tax laws change. Your financial plan should be flexible enough to evolve with both. Schedule a meeting with us to review your risk, your tax strategy, and also prepare for legacy and tax planning. Thanks again, everyone. Have a great rest of your week, and we will see you in, I guess, next week. Bye-bye.